Hello everybody, this is Lara at pureelliottwave.com, working through my list of requested free analysis. Today I'm going to analyse Polygon MATIC-USD. I'm going to try and make this relatively quick. I can see a 5 up complete here, that looks pretty good. First of all, let's get some cycle degree labels in here. I'm going to label this a possibly complete from the start here, 1 up here, and possibly 2 down here. First up, I'm going to calculate the percentage of 2. It's an 89% correction of cycle wave 1. It doesn't look like it's that deep because I've got this on a semi-log scale, but this is a really deep bear market, and I think it subdivides nicely as a zigzag. I can see a 5 up here. Nope, not like that. I can see 1, possibly a flat correction for 2, 2, 3, 4, and 5. Within 3, this looks like a decent looking impulse. That looks pretty good. And within the third wave, nope, I can see 1, 2, yep, and some third and fourth waves up in here. That looks pretty good. I think when we get down to the daily chart level, that's going to subdivide really well. I think primary 5, I'm just checking, yes, it has moved beyond the end of 3. It looks like it might subdivide, yep, as an ending diagonal. I'm just checking wavelengths. No, that doesn't work. 3 is longer than 1, 5 is longer than 3, but 4 is shorter than 2. Okay, so I don't know what's happening there. I'll have to look at that at the daily chart level. I'm going to save that, create a new chart. Let's look at some detail. First of all, okay, I'm not going to look at primary 1 or primary 2. I'm not going to look at intermediate 1 or even intermediate 2. I think they subdivide fine. I'm just going to check the middle of the third wave because that's usually the key to your wave count. Does the middle of the third wave subdivide as a corrective, as an impulse? Sorry, it may only subdivide as an impulse. So let's expand this out and have a look at it. Minor 1 and 2 look okay. Minor 3, will it subdivide as an impulse? I'm pretty sure it will, and I can see the middle of the third wave here. It's in here. Let's bring in MACD to help with the wave count. Strongest momentum here, the end of intermediate 3. Stronger momentum here at the end of primary 3. Primary 5 shows a decline in momentum. So the strongest momentum is for the third wave, so MACD supports this wave count. Intermediate 3 is what I want to make sure I can see good subdivisions for. I think I might even need to put these up here and might need to put this down here. The fourth waves can be relatively brief and shallow. I think I'm going to have to put this up here. I can see a couple of little fourth waves in there, and this is going to have to go down there. Nope, this is going to have to go up here, and this is going to have to go down here. This is going to fit beautifully. Okay, yeah, that has a really nice fit. The middle of that third wave fits really well. Look at how brief these fourth waves are compared to their counterpart second waves. That's really common behavior for cryptocurrencies, and it gives the third wave a curved look, a slow start, acceleration through the middle, and explosion at the end. Absolutely normal behavior. Just checking the low of this. Is it the low? 0.298470? Yeah, it is. So I think intermediate 4, a zigzag. That looks okay. Intermediate 5, this is going to subdivide okay. Oh yeah. Yeah, that has a good fit. That looks good. Is the third wave going to work though? Not necessarily. Expand that out. Let's have a better look at this. Okay, I'm happy with that, and I think the fourth wave possibly some kind of combination. Okay, I don't want to spend time on primary 4. Now I want to look at primary 5. Let's see how we can figure this out. So I wanted to label it as an ending diagonal, but that didn't work because the wavelengths don't work. 1 is longer than 3, 3 is longer than 1, 5 is longer than 3, but 4 is shorter than 2, so it's neither leading nor expanding nor contracting, so it doesn't meet the rules regarding wavelengths. So if a diagonal won't work, will an impulse work? Looks like it will. Nope, that won't work. Oh, okay, what if What if 1 was over here and 2 is... no, I want to see 1 over there. Could 3 have been over here? Third and fourth wave. Oh no, you want to see that. Oh, is there an overlap here? Let's see the high of this, 1.244963, and the low of this, 1.20. No. So that could be there. Okay, not ideal, but it does work and it does still fit. Mostly it fits common behaviours. So then the next question would be, is cycle 2 over? First of all, will it subdivide as a complete corrective structure? I think it looks like a zigzag. At the weekly chart level, I can see A, B, C. I'll show you. I'll put those labels in. Nope. A, B, and excuse me. And then C looks like a nice 5-wave impulse. And then A and C is somewhat close to equality. C is a bit longer. A is 1.6. C is 1.7. So close enough to possibly to say that they're reasonably equal in length. I think 4 might have been over here as some kind of triangle, or maybe here. Yeah. And then 5 fits as an impulse. That does work. Okay. Oh yeah, A is going to look okay as an impulse. Could this be? It could have been a double zigzag. Yeah. Yeah. Y hasn't really moved beyond the end of W though, has it? Slightly, but not much. That has a good fit. The third wave's going to fit, and it ends with a strong downward movement with strong momentum. The strongest momentum, yep, is the third wave. Momentum declines on the fifth wave, so there's some bullish divergence. Okay, that's my Elliott wave count for Polygon, and it looks pretty good. Let's have a go at calculating some kind of target for you. So this is my Elliott wave count, and these are my conclusions for Polygon from an Elliott wave perspective before we get into technicals. A 5 up complete here could be cycle wave 1. It lasted about 2.6 years. Cycle wave 2, lasting about just over half a year, was an 89% correction of 1. Cycle 1 subdivides quite well as a 5-wave impulse. There's possibly alternation between a flat of primary 2 and a zigzag of primary 4, or double or single zigzag of primary 4. And cycle 2 fits as a zigzag, and it's a very deep 89% correction, so it's most likely over there. It looks like there'll be some technical support for this view. I can see a huge bullish candlestick pattern here. We'll yet to see if that's got support from volume. Given past wavelengths, we can estimate an estimated range for the potential end for cycle wave 3. Within cycle wave 1, intermediate 3 was 24.95 the length of intermediate 1, and primary 3 was 63.635 times the length of primary 1. These are not Fibonacci ratios, these are just how long these prior waves were within this wave count. And so cycle 3 may quite reasonably be expected to be possibly 24.95 or 63.635 the length of cycle wave 1, which is 2.920223 in length from low to high. So that gives us a potential range for cycle 3 to end somewhere from 73.182 to possibly 186.151. So not a target, just a possible range of where it might end. I'd be using classic analysis and relying on that much more heavily than Elliott wave to see an end for cycle 3. But when I looked at the structure within intermediate 3, it does subdivide very nicely indeed as a 5-wave impulse at all degrees at the daily chart level. So this market is exhibiting decent looking Fibonacci structures, Elliott wave structures. I haven't looked at Fibonacci in this Elliott wave count, but there are good looking Elliott wave structures, which tells me there's probably enough volume for this one to exhibit Elliott wave structures. And so I would be looking at a complete Elliott wave count for cycle 3, and then also looking at classic technical analysis to see a normal end to this upward movement. Let's look at some technical analysis now. This previous low here, week beginning March 2020, down here the low was 0.007011. There was no bullish candlestick pattern off this low. Let's have a look at volume. I'll expand this out and go back here so we can see what volume was doing. Volume was pretty light early on in the start of this. A strong bullish candlestick here, a blow off top. Sideways movement, consolidation, downward movement here. Did not have push from volume. The first upward week and inside week, bullish long lower wick, but quite weak volume. So there's weakness off that low, which has been sustained to this day. That would have been a really hard one to identify. Let's bring that back here. At the high, some decline in volume. Volume stronger here at the end of the third wave. A decline in volume for the fifth wave, absolutely normal, supports the Elliott wave count. A bearish candlestick pattern at this high. This is an evening doji star, this 1, 2, 3 here. And now at the last low, a strong bullish engulfing candlestick pattern, which does not, it does have support from volume. It's stronger than the previous downward week. This upward week, the bullish candlestick pattern has support from volume. That's really bullish. What context does that come in? ADX tells us the downward trend did not reach very extreme. It was only 24 weeks. This is based on a 14-week average, and with these bounces in the middle of this downward movement, it looks like ADX couldn't quite catch up. It did indicate a downward trend, but the trend did not get extreme. However, RSI did reach oversold, did not exhibit bullish divergence, and that's the first time in the price history of this particular market that RSI reached oversold. So I would read that as very bullish. That downward movement was the most oversold Polygon has been in its price history. So with a strong bullish engulfing candlestick pattern which has support from volume, I would give that weight. No bullish divergence from money flow index, it didn't reach oversold. ATR declined throughout the bear market. Slight increase off that low, and now a decline again as price is moving essentially sideways. Here it is down here. There's a bullish piercing pattern at the daily chart level. So there's a bullish candlestick pattern at both daily and weekly. No bearish pattern here, or you could possibly see this as an evening star. No bearish pattern here. No bearish pattern here, although it could possibly be an evening star. Ideally, the real body of this candlestick should be above the real body of the previous green candlestick, but it isn't. Bearish candlestick pattern here, bullish hammer candlestick pattern here, bullish engulfing candlestick pattern here. Does this piercing pattern here have support from volume? No, it does not. But we do start to see volume pushing price higher here, and strongest volume so far after this low is for this upward session here, 18th of July, suggesting more pressure to the upside than the downside. For the short term, more pressure to the upside to the downside as well. So the short term volume profile is bullish. On balance volume, moving higher with price, a lower low after here. Price made a higher low, on balance volume made a lower low, that's bearish. But now on balance volume is moving higher. Price is closed a little bit lower, and on balance volume is a little bit lower. So there's no bearish divergence there. And now on balance volume essentially moving sideways. We could draw a range or grab a couple of trend lines. A breakout of that range from on balance volume would give a signal. Bullish, a break above, bearish, a signal below. So I'd watch that one at the daily chart level. ADX is declining currently. The DX lines are whipsawing. There's no clear trend as price is essentially moving sideways. RSI is neutral after reaching oversold at the daily and weekly chart level. Doesn't look like, oh yes, there was some bullish divergence at these lows. The close here, 0.601539. And the close here, 0.34. So price is closed lower, RSI is higher. And after RSI reaching oversold at the weekly chart level for the first time in the price history for this one, I would read this as supporting evidence to support that Elliott wave count. It looks like the technicals are definitely supporting a bullish Elliott wave count. Money flow index neutral. Did this exhibit bullish divergence? Possibly, but very slight. ATR showed an increase at the end of the bear market. That's good to see, actually. These bear markets for cryptocurrencies can end with some strength or increase in volatility. I'm using ATR, average true range, as a measure of volatility. A little bit of an increase off the low. That's probably lagging though. This is based on a 14-day average. And now price moves lower, ATR flattens off, price is sideways, ATR declines, price breaks above resistance, ATR starts to increase as price moves slowly higher, and now it's declining overall as price is moving essentially sideways. It looks like volatility is to the upside. That indicates there's probably a bullish bias for this market. And stochastics in neutral territory. Okay, that's it for my analysis for Polygon for you. Technical analysis offers some quite strong support to this Elliott wave count. My list is getting quite small. I'm going to be instituting a voting system in a few weeks so that I'm not spending my time on small altcoins that very few people want analysis of. I want to be spending my time, limited as it is, on coins that in markets, various markets, that a lot of people want analysis of, because there's just not enough time for me to do analysis of everything you guys are asking me to. Okay, thank you so much for your support. Thanks for watching.